Hello everyone, today is September 25th of September, Beijing time. For the past 2 days, there's something very exciting happening in Chinese stock markets. The stock markets, Shanghai and Shenzhen, as well as Hong Kong, jumped by more than 5% in 2 sessions. And the trading volumes more than doubled during the past 2 sessions. Now, why is that? The reason is very simple. Yesterday, September 24th, China's central bank governor, Mr. Pan, announced that the central bank will do 2 things to support the real economy and also the stock market. Number 1, the central bank will allow investment banks and mutual funds to borrow money from the central bank by using their existing holding of stocks as collateral. So this is equivalent to the central bank injecting money into the stock market, okay? So this immediately has an impact. The other measure is to allow large shareholders of existing companies to borrow from a central bank in order to use their cash to buy their own shares as a way, what we call stock buyback plan. Okay, this will support the stock market. In addition to this, there's a second item to the package about the property market. That is, the central bank says that commercial banks are encouraged, are actually required in the coming 1 month to lower the interest rate of existing mortgage. Now, in China, of course, the mortgage interest rates are flexible. They are indexed to the prime rate of the central bank. However, the frequency of the indexation is 1 year. That is, they only make adjustment once a year. Now the central bank says, okay, do it right now. Cut your interest rate on existing mortgage right now. Don't wait for January 1st of 2025 or the anniversary date of the signing of the mortgage. Okay, so this is immediate. This injects cash into the hands of households who have mortgage. So these 2 categories of policies, number 1, supporting stock market, number 2, supporting mortgage homeowners and the mortgage holders. These 2 are immediate in supporting the stock market in China. So the question is now, will the rally in the stock market continue? My answer is very simple. It depends. Depends on whether the central government will continue pushing out or rolling out new policies, just like the central bank's policies to support the real economy. I am guardedly optimistic. I believe that other departments of the central bank, like Ministry of Finance and the National Development and Reform Commission, will have their own policies rolling out in the near future to support the real economy and to support the stock market. The most important policy which I highly recommend and highly anticipate is for the Ministry of Finance of China to issue lots of long-term debt in the amount of 20 to 30 or 40% of GDP, and then use the proceeds of this long-term debt to swap out local government debt. This way, local governments will be relieved of their heavy burden of servicing their debt. This way, the real economy will regain its own energy as normally the case. So let's be hopeful that the Chinese economy and the Chinese stock market will move on to a trajectory of upward adjustment. Let's see what will happen.